Why is the US dollar so strong despite global and geopolitical headwinds, wars, inflation, and hikes in interest rates by banks? A question that puzzles many, yet the answer lies in the enduring power and resilience of the US dollar in the face of adversity. This tenacious currency continues to hold its ground, unfazed by the tumultuous waves of economic shifts. Before we dive in details, please subscribe to the channel and stay always one step ahead to know all global important events happening around you. Give a thumbs up and share the video with your family and friends. Let's move on with the video. The ratio of government debt to GDP for the United States is at a record high, approaching 130%. A prudent level is considered 30%, and anything over 90% is a headwind to any economic growth at all. The US is running multi-trillion-dollar deficits year after year. The Congress and White House seem in the grip of modern monetary theory, which claims that the US can run unlimited deficits and accumulate unlimited debt without economic harm, because it can print money in unlimited quantities to finance the debt and spending. So, what makes the US dollar so resilient? What secret sauce does it possess to withstand the economic storms that batter other currencies into submission? To understand this, we need to delve into a chronological timeline of events that have shaped the strength of the US dollar. Meanwhile, projected annualized interest payments on the US national debt exceeded $1 trillion at the end of October, according to Bloomberg. The cost of debt service has doubled in the past 19 months as interest rates have risen. This fiscal profligacy comes against a backdrop of social unrest and political dysfunction. We're facing a presidential election next year in which one candidate, Biden, is senile and the other candidate, Trump, may be behind bars on election day. Take your pick. But the dollar keeps on chugging along. How can the dollar be so strong against such a dismal landscape? There are two answers to this question. Answer one. The first is that the dollar has its problems, but other currencies are in even worse shape. For example, the Chinese yuan is on the brink of collapse, being held aloft by non-sustainable intervention by Chinese banks. The Japanese yen is joined at the hip with the yuan because of the extent of Japanese investment in China financed by Japanese banks. With the yuan going down, the yen will go down in sync. So that's two major currencies with problems. Meanwhile, Europe and the UK have deindustrialized under the sway of the Greeniacs, pushing the green new scam policies. Now Europe faces a winter of freezing in the dark if cold weather is extreme, and Russia decides to turn off the energy taps. Germany, the largest economy in the Eurozone, is heading for recession if it isn't already in one. And the same is true for the UK. That's two more major currencies facing troubles. So yes, the dollar has its problems. But as an investor, do you really prefer sterling, euros, yen, or yuan? Answer 2. The second reason for the dollar's strength is much more technical and not well understood, but it's critical to grasp. You don't need to nail down the technical details. It's enough that you understand the bigger picture. It involves the so-called eurodollar. Eurodollars are dollar-denominated deposits held at foreign offices of major banks, and therefore fall outside the jurisdiction of the Fed and US banking regulations. The Fed actually has very little influence over the global dollar market and the exchange value of the dollar. The old currency metrics of balance of trade and moves in capital accounts are leftovers from the world of fixed exchange rates, which have been gone for decades. What drives the dollar is the euro-dollar market, as conducted by the world's largest banks in London, New York, and Tokyo. It's here where global liquidity and interest rates are actually determined. The eurodollar market needs a constant supply of depositors parking their money in offshore offices of major banks. Right now, this market is in contraction. Derivatives are being unwound, balance sheets are being trimmed, and interbank overnight lending is being financed with collateral. And these banks are demanding the best collateral. They won't accept corporate debt, mortgages, or even intermediate-term US Treasuries. The only acceptable collateral consists of short-term US Treasury bills. The shorter, the better. This means 1 month, 3 month, and 6 month bills. Those are denominated in dollars, of course. In order to get the bills to post as collateral, banks have to buy dollars to buy the bills. This has created enormous demand for dollars, and that partly accounts for the strength of the dollar. Again, it's not important that you understand the intricacies of the eurodollar system, just that high dollar demand in the eurodollar market is contributing to dollar strength. The fundamental dollar shortage problem is not going away soon, and will continue to support the dollar. Now let's fast forward to more recent times, to the monetary policy decisions made by the Federal Reserve, the US's central bank. The Federal Reserve plays a pivotal role in influencing the value of the dollar. By adjusting interest rates and controlling money supply, They can either strengthen or weaken the dollar. For instance, when the Federal Reserve raises interest rates, it often leads to a stronger dollar as higher rates attract foreign investors looking for better returns. And then, there's the elephant in the room, the COVID-19 pandemic. A crisis of a magnitude we haven't seen in a century, the pandemic sent shockwaves through global economies. With businesses shuttered and unemployment soaring, economies were on the brink of collapse. But the US dollar? It remained resilient. Again, in times of uncertainty, investors turned to the dollar for stability, reinforcing its strength. Moreover, the US government's swift and massive fiscal stimulus in response to the pandemic, while increasing public debt, also supported the economy, and by extension, the dollar. So you see, the strength of the US dollar is not solely rooted in its historic position. It's a complex interplay of various factors, from global crises and monetary policies to economic responses to unprecedented events. These modern events and policies have further solidified the US dollar's position as a global reserve currency. So, what does the future hold for the US dollar? Well, there are several aspects to consider. First, changes in US economic policy could significantly influence the dollar's strength. For instance, should the Federal Reserve decide to raise interest rates or reduce the money supply, the dollar's value could potentially increase. Second, geopolitical events are always a wild card. Unexpected events, such as conflicts, trade wars, or major policy shifts, can have unforeseen impacts on the dollar. These are often challenging to predict, but can dramatically sway the dollar's trajectory. Finally, we can't ignore the rising influence of technological advancements, particularly cryptocurrency. As digital currencies gain mainstream acceptance, they could pose a challenge to traditional fiat currencies like the dollar. However, it's also possible that the US could leverage these technologies to strengthen the dollar further. Only time will tell how these events will shape the future strength of the US dollar. In conclusion, the US dollar's strength is not accidental or arbitrary. It's a product of a complex web of historical and contemporary factors that have been meticulously analyzed in this discourse. We've journeyed through the annals of history, seeing how the dollar's power was solidified post-World War II, when it became the world's reserve currency. We've also delved into modern influences, such as geopolitical events, economic policies, and market dynamics that continue to bolster the dollar's position. From the Federal Reserve's role in managing inflation and interest rates, to the global demand for US dollars in international trade and finance, these factors intertwine to create a robust and resilient currency. Even in the face of global headwinds, wars, inflation, and interest rate hikes, the dollar stands strong. It's a testament to the interconnectedness of our global economy and the enduring influence of the United States. Understanding these factors and events is key to understanding the resilience of the US dollar in the face of adversity.